For tuning into this conversation on the sidelines of the CLSA India Investment Summit. We're talking to Laurence Balanco. He needs no introduction. It'd be lovely to understand from him how does he see India positioned relatively and in absolute terms on the charts. Laurence, good having you. Thanks for joining in. Hope all is well.
Good morning. Thank you. Thanks for having me on the show.
The pleasure is entirely ours, Laurence. India has been a ranked outperformer. Maybe a couple of countries on that scale would have done better. How are we looking from where we are right now? How are Indian markets looking from where they are right now?
Yeah, look, we've had essentially over the past 10 months a pretty decisive consolidation pattern that's formed between 15,400 and this 18,500, and we're now right at the top of the range, setting up ultimately what we think is for a breakout into the new year and really extending to upside targets of around 20,185 is what we see, that trading range that we've had for the past 10 months supporting into the new year. So while we might see a bit more volatility around this 18,400 area, ultimately we punch through that area and trade up towards the 20,185 area.
Mm-hmm. Is this a part of the larger Santa Claus rally that the world markets may have?
Yes, I mean, quite a few things sort of lined up in October, suggesting that we had a start of a recovery rally. India didn't really suffer as a number of the other global markets. In local currency terms, India hasn't even met the definition of a bear market, being down 20%. So it's been very resilient. It's been one of the lead markets globally. But basically, when we got to the October lows on the US markets and the general world index, you had sentiment extremes, you had some slowing downside momentum. And from a macro side, you started to see yields advance, stall out, as well as the dollar correct. And that's been all the ingredients for this recovery rally that we've seen. And now supporting that is the positive seasonals that you get basically into the new year.
Got it. How would India perform within the EM pack? Because fundamentally, Laurence, a few people believe that if the world markets at large were to inch higher, then India may be a relative underperformer to a KOSPI or a Chinese markets, etc. How do you see that relatively?
Yeah, so I think on a longer term scale, there's no question that India remains a long-term leadership market within the Asia sphere as well as the emerging market aspect. There is a subtlety when you look at seasonals into year end, and there's this behavior where people take profits from their winners and there's an allocation to the underperforming markets in the dogs of the Dow type theory. And because of India's strong outperformance that you've seen year to date, we have seen some relative underperformance. And that India hasn't gone up as much as the recovery that you've seen in China and Korea, because those have been the markets that have underperformed most. So yes, into year end, if we had to get into the weeds, India potentially underperforms into December, January, because you're getting this rotation into the laggards. But it doesn't alter the longer term leadership that you've seen in the Indian market.
Most certainly. But you do believe that while we might inch higher up to 20,000 odd levels that you mentioned, which is about 8% from where we are right now, the other EMs or the other Asian markets might do slightly better.
Yes, correct.
Okay, great. The other question is what role does the dollar index and the oil or the correlations thereof play out here, Laurence? Any thoughts there?
Yeah, so I think one of our key calls into 2023 is just more evidence of the dollar putting in an important topping pattern. So we've already seen the reversal from the September high. We've broken the 50-day, and we've seen the dollar lined up to test its 200-day, but also the highs that it made in 2017 and 2020. So we actually see further dollar weakness into year end back towards the 102, 103 area. But in 2023, we do expect to see a bounce off that area, but that bounce should form a lower high, and that will just give us further evidence that the dollar is forming a major top. And what that will mean for emerging markets and commodities is, particularly in the second half of 2023, is a weaker dollar should be beneficial for commodities, but also the relative rating of emerging markets versus the world and Asia versus the world.
Oh, okay, interesting. So, Laurence, may I ask, just before I get to some specifics? So we might hit about 20,000 odd levels if all goes well by, say, December end or January. Yep. I presume that's a near-term peak. Do you expect a substantial downdraft from there, or would it just be a routine correction, if there will be a correction?
Yeah, so for the India market, we don't think we go and break below the June, July lows, but we do think we could at least come back to the 17,000 area. So that's roughly where the 200-day moving average is setting up. And for the US market in particular, we think we can retest the June lows around the 3,500 area. And we think that's really on the back on how we've seen markets react in recessions. And if we also look at what the average bear market is in the US, that's a 35% decline, which we haven't met. So I think the two negatives in the first half of 2023, once we get this sort of January, February peak in markets, is sort of recession fears, as well as what we've typically seen in an average bear market.
Okay. And in the run up to 20,000 in India, would it be a narrow rally the way it used to happen in 2020, or could it be broad based, Laurence?
Well, I mean, I think we've already seen at this stage the advance of the October lows has been skewed to the heavyweight stocks driving it, and banks are still a leadership group, and we still think that will remain the case going into 2023 and beyond. So it has been narrow, and that should remain into the January, February highs.
Okay. So you reckon you are constructive on banks? It's the heaviest sector, and everybody is constructive fundamentally on banks as well.
Yeah, well, trends work when consensus is right, and that's pretty much what we've seen play out currently. But if we have to look at some of the subtleties within banks, and something we've been flagging for some time now is the public sector banks relative to the broader banks index. You've seen public sector banks essentially underperform the broader banks index since 2010 into the 2022 lows, and over the past 2 years you've seen a major base, and we've only just started to re-rate. That's the public sector banks versus the broader banks index. So yeah, if we have to get into more details, I think really public sector banks is the standout within the broader banks space.
Very interesting. Any new themes that have come up on the charts for you, Laurence? There's a lot of chatter in India around defense, around capex, but that's not a sector. That's a very wide basket of stocks. So in terms of themes, anything new that has sprung up on the charts for you that has seemed interesting?
Yeah, I mean, sure. Well, we are seeing some of those defensive names lead and good uptrends there. So, that's not a fresh idea that's coming through, but those trends are clearly intact. Probably a place where we would look at taking profits is coming out of the autos, which have been great performers essentially year to date. That has stalled out over the past 2 months. We'll definitely be taking profits in that space. And in addition to that, the fast-moving consumer goods space has also started to stall out after some relative outperformance into September, and we think there's a relative downside risk there.
Got it. Last question. I'm tempted to ask you about crypto, but I don't know if you track that at all or no. Sorry.
Yeah, no, go ahead. I mean, we do track it. I mean, I think it is one of the risk parameters that we do look at. And before the sort of blowing up of the exchanges and the like, you already had the break below 30,000, which essentially left a major double top in place on the Bitcoin chart. It gives you a downside target of 12,000. So we still think there's further downside risk towards the 12,000 area.
Great. Laurence, lovely talking to you. Thank you so much for sharing your intelligence with us, and have a great end to the year. We look forward to talking to you once the new year starts.
Thank you, and you too.
Thank you, and viewers, thanks for tuning in.